Sound check 1 2 1 2. Sound check 1 2 1 2. Okay. Sound check 1 2 1 2. There you go. We're good. We're good. We're good. We're good. We're good. We're good. Okay. Sound check 1 2 1 2. There you go. We're good. Good. Telling the guys on Instagram that we're live, and then we'll begin shortly. All right, guys, let's start. So GM, guys, GM. Let's do a market review. So today we took a trade in the boot camp, and it was an L. I remember, when was the last time I took an L? That was offside. 2 weeks ago. I can't really remember. But yeah, today was one of those days. I was offside, but I was in profits for a short while because, you know, even when I'm wrong, I know a good entry when I see one. Okay. So we have the hourly chart on my left. I'm just going to zoom in on that one first, and then we are going to I'm going to talk about what I anticipated going into my execution and what panned out, where I got it wrong. So let's talk about my entry. So overnight you had this pump going up during Asia, and we made that high. I think it was around London, and then looking at this candle, we swept that high, and then we went back inside the range, right? On 4 hour, it was looking like this. So this is the time frame I was mostly focused on going into my trading session. We have this sell side here pushed higher, retraced back to the discount of this whole entire range here, and then we went all the way up, creating the change in state of delivery after taking out those sell sides inside those relatively equal lows inside this imbalance, and then we pushed higher, creating this imbalance here. I was hoping to get this sweep. I was gonna be happy to take a sell if this candle opened, took out that high, and then trade it back inside this range here. But that's not the case. So because we opened and went inside this range, as soon as this candle opened, you can see when I was making this week, I was already in there because it opened, took out that sell side first, and then it went up, and then this is where it took me out somewhere here. So I'm going to show you on 1 minute how that looked like, because I was thinking we're going to fill this imbalance, maybe take out those that high and those relatively equal highs, and then maybe before we drop, if it wants to drop. But actually I had this range marked out, the swing low here, that swing high, and inside this imbalance I was looking for an equilibrium of that range, pairing it with the consequent encroachment of that, and I wanted to see price find support there, maybe for my second entry, so I can execute on that. And 7 o'clock here we opened um, somewhere here. We opened somewhere here. Okay, this was the opening price at 7 o'clock. Do this. So if you understand the $1 million model, this is the most important part, the first 30 minutes after 7 o'clock. 7 o'clock here, we create a high and we clear that high right there. We drop, extending the range, and then we leave these smooth edges here. 8 o'clock, we open, sweep these smooth edges here, and then price drops, creating a change in the state of delivery going into the 830. Look down here, and then now we have that high and this low, pre-market range high, pre-market range low. And when you open, you are opening at equilibrium. Now what do you want to see? If you have that scenario first 30 minutes, what do you want to see? You want to see a continuation towards the downside, but 830 has to price in some form of premium, right? And this, when it was trading back inside this fair value gap, it was actually crossing that equilibrium here, because if you look at that high and this low, equilibrium is somewhere here. You were pricing in a discount, and it went all the way down to take out the pre-market range lows. Now it then came back again in, but it didn't take out that high because the structure was too bearish, so it was respecting that bearish structure. It only came to take out those highs right there. See the bodies taking out the rejection block, and it respected the consequent encroachment right there. Dropped once again. Now we are trading, this is permissible, we are trading, this is an NFP week, so things like this you're going to see them. When it left this fair value gap, I was watching this guy here. I want to see if it's gonna, because the fair value gap was too huge for me to execute on it, because if I sell here I have to use that high as my stop loss. So I waited, and actually I didn't want to sell it because it had already taken out the pre-market range lows here. So I was more interested in those highs after 9:30, or maybe during the macro, the 850 macro, since we did not have a red fall news event. Okay, but a continuation, you just need 830 to price in some form of premium, and if you're bearish, this was a viable entry. If not, this one, this is the one I highlighted in the group. I said this is the one I would actually like, but I would take, but I'm no longer that bearish because I didn't have that much bearish bias, because of the fair value gap here on the 4 hour and those relatively equal highs, and the fact that this 4 hour candle closed bullish above this one, going all the way up, creating relatively equal highs with previous Friday's high. I think this is Friday's highs, opening price of Sunday. Yes. So I thought maybe it was going to push all the way up and take out those highs, then drop, and I was only targeting this high. My best case terminus was that high, but I was just gonna take everything out above pre-market range highs actually here. I'm now gonna show you my annotations and explain to you everything. But first, let's look at the calendars. Then we're gonna go through it one more time. Tuesday, the 2nd of June, we have medium impact news after 10 o'clock. So we can trade silver bullet. But since we do not have red folder news, we rely on macros and pre-market. Okay, so pre-market, these are my annotations. Okay, let's first start with this one here. On 4 hour, I had those highs as my best case terminus, previous day's high, Monday's high, I think, yes, Monday's high, Sunday's high, whatever you want to call it. And then we had this range marked out. So I said if come on. I wanted to see price find support inside the fair value gap here and then push towards the high. So you're going to see this. This was if I was bearish and the setup for sales was clear, where it was smooth, I was gonna use this as my best case terminus. Actually, I was supposed to do that. That was the right thing to do today. Looking at this range and inside the fair value gap, take everything out at this consequent accretion or the equilibrium level. Sorry. But that was not the case. So let me show you what happened here and why we took a loss and how and where my execution was. So before we do that, let's go to 15 minutes. So you can see 15 minutes here first. So we had Asia going all the way up, pushing, extending that range like that. And then during the silver bullet London session, 3 o'clock made the high of the day. And then it closed bearish right there, went all the way up, down, respected the fair value gap, the body stayed inside this PC, and then went above it again, and it only closed bearish inside here. Then that is where I think I got the buys here initially because I was looking at this fair value gap. Let me zoom in. I was looking at this fair value gap here. And my thought process was we have everything balanced here. Here we had an institutional order flow entry rule, so I was just interested in this and finding something here to go above these highs one more time, the pre-market range highs before the actual drop. Now, let me show you what happened inside this inversion here on the 1 minute so I can explain it again to you guys with clarity. Okay, so this is what happened. 7 o'clock opened, took out that high, extended the range. Now this is already telling us to anticipate the continuation, and that's a protected high until the pre-market range lows are cleared. And if you had a bias like I did today, so I had this guy, I'm just gonna do this, and then I'm just use a yellow so that it stands out, sync it in layout so that you can see that I was watching this fair value gap here, and I thought, okay, it's gonna punch higher from here. So I was just waiting, and this smooth, I still liked this these highs after 8:30 because yes, 8:30 opened and it delivered as per my model, but the entries, let's say I went short because okay, let me show you something here. When 7 o'clock opened and did that, and I mean and it extended that range, it left these smooth highs. So we study the opening prices at 8 o'clock. When we are here, we do the 30 minutes look back from 8:30 to 8 o'clock, scan the smooth areas, and that's exactly what happened here. We had already made those smooth areas jagged right there, and then there was a strong shift. This is confirmation. This displacement is confirmation in validating this fair value gap. Now, on a good day, price was not supposed to come all the way back up here. It was not supposed to do that, but it did. And if I shorted that, because my reasoning was going to be, we have taken out the smooth areas here after 8 o'clock going into 8:30. Now I just need 8:30 to give me the displacement that I need and give me an entry, because we've already done the dirty work to take me to these guys here. That new week opening gap low and best case terminus the 15 minutes. Now, but 8:30 needs to price in some form of premium. I can't just take it at discount. Now you have that high, you have that low. That's your pre-market. And when we open, we had already done this. So I do not take these kind of trades if we just have a swing high. It's only for when we have smooth edges like how we did here. This is smooth, yeah. These are all smooth edges. Yeah. This is all smooth. So we took out the smooth edges after 8 o'clock. and then we made this area jagged inside that imbalance, and then we displaced lower, creating a change in the state of delivery. Now, when we open here at 830, that's the opening price, we go above this line here, pricing in that that premium. That's why this trade was viable. We took out, so that drop to these lows here was a viable trade when we crossed the equilibrium inside that imbalance. This was the only viable setup here. Stop loss above that guy. But let's say you're targeting these the fair value gap down here. That was going to be a viable trade. But knowing myself, after taking out the pre-market range lows here, I was going to go break even and get trailed out there. Maybe with a partial, depending on my position. How big is it? Because if I held it and after making those relatively equal highs, you could easily get swept again here and then give you a new structure. So it was just it was a tricky day, if you ask me. This is not an easy day to navigate, and we understand that because Friday we have what? We have the NFP. So price is going to have those it's gonna hit those rejection blocks, rest assured. And that's exactly what happened here. It came for the rejection blocks and then it dropped again. Now look at this CB. This is not an inversion, it's a reclaimed. It's a reclaimed fair value gap. Because the initial function of it was to push it lower. So here, after that job was done, it managed to do its job here. I wanted to see it go all the way up to that one, maybe give me a bearish market structure shift somewhere here, maybe engage that. But when we created this fair value gap here, down here, I was like, I already don't like how deep it goes. It keeps coming back and all of that. And I didn't like this. So I just stood there. I said, okay, I'm interested in seeing how price is going to behave once we make it to the fair value gap on 15 minutes here. And during the macro, because we rely on the macros if we do not have red for the news event. And I traded this macro here. So inside this macro, we did two, if not three things. This is the fair value gap here on 15. Let's zoom in here. So inside the macro, we did this. That is what triggered my entry. We took out the sell side field and we rejected the equilibrium of, the consequent encroachment of this fair value gap on 15 right there. That was one thing. And then we made the change in the state of delivery. And then when we did that, I entered my first position somewhere here. And then we inverted that and I added more down up here. And then it went all the way up and I was now holding. My stop loss was down here. So this was my position. And I was already interested in seeing the price go all the way up. So I think my average entry was somewhere here. Stop loss here. Because I had like multiple. And I wanted to see price go all the way up to those highs right there. So that was like a 3R inside the macro. So everything ticked because I was trading the macro and obviously trading my $1 million model. It was a viable setup in a way, but price was very strong. It was just bearish. So it just went to premium. And once we priced in that premium, it just failed. And the first PDRA premium was this reclaimed and that buy side there. So as soon as we did that, it just came back and fell on me. And that was the only trade for the day. After that, I wanted to see price after taking this out because there was a 5-minute fair value gap. I'm going to show you that fair value gap here on 5 that was respected when price was doing that. This is the fair value gap on 5 minutes. This one here, the candle failed to close above it after invalidating this lower one here. So I'm going to sync it in layout so you can see this is the favorable gap that was respected. And then it just failed, and that was the trade for the day. Guys, I'm gonna do this. And yeah, so that was a trade, and then after that it went all the way down to this guy, and I didn't take it. I didn't take this because it was already too bearish for me. I wanted to see candles fail like this one here to close below the midnight opening price, retest it after 10 o'clock, and then punch higher, give me that strong push. Then I was still gonna buy it some more, but I couldn't get the second entry. So this was the only viable trade. I think this favorable gap was the proper trade. The only proper trade for the day was this CB towards this 15 minutes, according to my model. Of course, just a continuation of that. But it was more of a bias entry at that point than the model, because I like to trade within these pre-market range levels, and not unless I have a strong bias, which I didn't today. I was going to engage this sell and take it all the way down. So guys, today was very insightful. Even though we're offside, but we're actually onside. We're supposed to have at least a break even. I'm going to show you my execution right now so you can see where we went in. There we go. So the stop loss and everything was perfect, and you know yeah, I can't complain. It was actually uh yeah, it was a good trade management, if you ask me. Let's zoom in one more time. There you go. So I was still interested in those highs, and I still am, but not for tomorrow, obviously. I'll just keep them in mind for now. And yeah, guys, I hope this was insightful. And yeah, so this was a viable trade. I think that the best entry for me, the best entry was supposed to be this, because I know this was supposed to be the rejection blocks here. And in the future, I'm going to trade this with the stop loss above the swing high, because I know it's not going to hit. And I'm going to catch bangers. This is a 9R at this point. I'm going to catch bangers. So now it's a matter of refining my entries. And because I understand my model like that, I'm getting to those, especially on NFP weeks. I actually have it written down. On NFP weeks, I'm going to trade rejection blocks. And if I see a signature of a continuation somewhere here, boom, I'm hitting that rejection, because the rejection block is actually good. You can't just trade any rejection block. You have to trade the one that comes after there's a bearish market structure shift confirmed. But you know that NFP is going to have those deep retracements, and that's going to be your entry. It's going to be a very I'm just going to get to those level to those I can even use this. Can even use this and get like let's in 14R. But for just because I'm that careful, I'm just gonna go ahead and use that one, because I like to have that extra confirmation, or extra cushion, or extra safety. So safety factor. So I'll see you guys on the next one. Hope this one was insightful. And yeah, if you've got any questions, let me just go through the comments real quick and see what do we have. If we have anything, just give me a second as I check the comments on YouTube. Do you guys have anything? Maybe any questions? Because I know most of you guys, maybe you guys fumbled today. It was not an easy one, I don't want to lie. Very tricky. Let's see if you have comments here. What's the biggest time frame you start analyzing from? Well, it depends on which one is more is on which one is clear, or is giving me that clean market structure. I can use the daily, I can use the 4 hour, I can use the 1 hour. Today the 4 hour was the one that was looking, it was much cleaner compared to all the other time frames, because of that imbalance. And yeah, so that was the time frame for me today. Because let me just take out all of these things here and show you how clean this thing looked. And this fair value gap now is just gonna, this fair value gap is key. This fair value gap is key. Now that we've invalidated that fair value gap, and it's telling me something about this gold. It's definitely telling me something about this gold, and I have a feeling we're going to have another, we already have another fair value gap here, another CB. So we have a balanced price range here. This balanced price range is going to be key going into tomorrow's trading, and you know, I think we might see it go all the way down to this imbalance or that inversion right there. I think it's weak. I think it's weak because we've now inverted that. We closed below it right there. So yes, and if you started a new week opening gaps here, this candle actually failed to close above the consequent encroachment. I should have seen that as a weakness when I was going into today's trading. I should have seen this as a weakness. Yes, we closed bullish above this candle's high, but we have another PD array in close proximity. We went all the way up to touching the new week, current new week opening gap high. But look at the body. The body refused to close above the consequent encroachment. That's weakness. So I was supposed to see that, and with the continuation scenario going on here, I was supposed to actually be able to, let me do this. I want to channel this actually before I even forget it. Yeah, guys, let's not make this video too long. Yeah, any questions before we go? Any questions? No questions. All right, guys. See you guys. Sorry, I still have the screenshot here. I was saying going into tomorrow, we have this fair value gap which has now failed right there. So we might see it, the balance price range, single pass up, single pass down. I think we might have a high here, and then maybe these lows could be revisited and go all the way down here. Sorry guys, I still had my screenshot, so you couldn't see what I was saying. So that's what I was saying. Yeah, if you don't have any more questions, guys, let's end it here before this video you know ends up being too long. So I'll see you on Discord. Ciao ciao.